we continue to reiterate, U.S. economy's mired in quad 4 here in the second quarter. Haven't really gotten any second quarter data yet, obviously, but sort of what we've seen with the end, or at least the handoff towards the end of the first quarter data with some of the March data, is that we're already starting to move in that direction sequentially, and certainly have been in that direction from a growth perspective on a trending basis. But at least the breakdown in growth data towards the end of the quarter, which we're going to get Q1 GDP and real PC growth next month or next week, you're definitely going to get a fairly weak handoff in quad 4. So we continue to be really negative on the U.S. economic outlook from a growth perspective. We are the street low on 2016 growth, have been the whole time. That's something that hasn't changed. We don't expect it to turn bullish, in the U.S. economy until we traverse the most difficult parts of the cycle in base effect terms, which is the second and third quarter of this year. If you think about that from GDP and real PC perspective, which obviously makes up 69 to 70% of GDP. On inflation, we definitely have one sort of quarter of inflation ticking down, from its trend higher really throughout the back half of last year, before it sort of resumes its trend to structural lower highs. So again, we're neither deflationistas nor inflation hawks. We just think inflation on a reported basis in the U.S. is just going to continue to make a series of lower highs and lower lows over the long term, and we've already hit a lower high, just in terms of thinking about it from a very cyclical short cycle perspective here in the second quarter.